Good morning, everybody. How's everyone doing today? Hope y'all can hear me. And yeah, had a really great weekend. Hi, Miles. Hi, John. Yeah, I accidentally started the stream without getting the stream key in where I needed to, so hopefully I didn't mess up the sessions later this week. All right, great. Thanks. Appreciate that, John. Hi, Johnny. Well, off to a quick start here on crude oil. One winner after another, definitely one and done, depending on whatever trade you took. Still a winner, I'm sure. But right now we got this long trade on the Dow Mini. Market's about to open. 32,068 is the long. Just triggered in again. Stops at 32,024. It's targeting 32,106, 32,126, etc., etc. And it looks like it just hit, or did it miss? Missed by one tick. Target one, move your stop to break even if you're in it. And it did just stop out. Let's see, that one was going to, like I said, 106, and it got as high as 105. I mean, usually if you miss a target by one tick, that kind of qualifies as power of quitting. And actually, that stop moved up beyond break even. That happened pretty quickly. Let me know if you grabbed it. Good morning, Steve. I mean, the trade plan did its job. It's hard to get all the words out fast enough. There was enough time to trade this if you're on your toes. Yeah, I don't know if we should mess with it because the trade plan kind of did its thing. Soybeans also, let's see, soybeans was just too fast. So we'll have to wait for another setup on soybeans. Keep an eye on that one. We're going to want to catch it. Meanwhile, you could see the pound Aussie was one and done. The entry adjusted down to 177 or 176.99 off that key level. And then it came up and hit it right there. 76994, 4 minutes in to the after the start time, and then it just came down and just barely missed target 4. So nice one and done trade on the pound Aussie. Spotlight Master Suite just doing what it does. And if you look at what we got here on crude oil, same type of morning where just everything just worked out really nicely. Lots of trading going on, but right here at 9, this one may have gone too fast. Looks like it probably did. I'm not sure how long it hovered. Definitely a one and done if you hit it, but then if not, then there was this one, and there was plenty of time in here, and that one's certainly at least getting to its minimal target, 1 for 19 ticks. So there's your crude oil winner today. Dow Mini in a second trade, and that one did just come down and hit its target 1. Also, it's like everything's firing on all cylinders, it seems like right now. Filtering out a trade on soybeans, so still flat there. There's no trade yet. I didn't look at unleaded yet this morning. This one looks like it was probably too fast. I don't know. Ends up being close to a break even. This one here, this is looking like the trade that did the job for unleaded gas. Plenty of time to grab it all the way down to a perfect target 4. Did it? I think so. 9942, 9944. All right, it missed target 4 by a dill pickle chip. Nice Nice one and done session on unleaded gas. Lots of great swing trade movements in here. It's weird. I'm not sure why this wouldn't have been a short trade. Should have been. Anyway, this was obviously the squeeze filter that kept this gray. But why this isn't a short trade, I don't even know. There's got to be a reason, but I can't figure out what it is. Looks like it's way overbought. That should be a short. I'm not sure why it's not a short. Okay, anyway. One and done. And if you're just joining us, welcome, welcome. Hope you guys had a nice weekend. Please don't forget, hit the subscribe to the channel if you haven't done so already. Hit the bell so you get notified, and please hit the like button as well. And might not be in here too long this morning. I mean, we've obviously, strategies have kind of done their job on most of our charts already, and today is the big graduation day. My daughter, good morning, Pamela, graduating college, big day. And kind of got a long way to drive to get to the ceremony, which starts in like 2.5 hours from now. So I'm not sure how long I'm going to be with you guys this morning. Luckily, we got most of our work done quickly. Here's the NQ610 tick with Counterpunch Trader. We were looking at this the other day. It's a really nice chart to trade. In this one here, you could see there was a long trade that was hidden inside of this green bar, and not sure really. Yeah, you might have been able to grab it, and if so, it would have stopped in reverse. That one's probably overlooked, but if you grabbed it, it was a loss. But then the purple trade got in here, and that was a nice winner, getting at least a target one before maybe hitting its stop right there. And target one, 164 ticks. What's that divided by 4? 164. Let's see if it's one. What's that? 41 points. 41 points times $20 a point. How's that for fast math? I only had 2 cups of coffee so far. Well, she's got a BS in she's graduating from Haas Business School at UC Berkeley, their global management program, which she's actually the first graduating class. It's a brand new program that there were 800. This is Dad's bragging rights here. 800 applications to join, and they accepted 30. So she was one of the 30. Good morning, Mike Palmer. Yeah, and she finished in 3.5 years, too. Some people are just made for that kind of thing. Me, well, never mind. I'm not going to even mention it. All right, the YM winning again. Still waiting on that first trade on soybeans. So just talking about the schedule later this week, John is going to be in here tomorrow, Wednesday, and Thursday. I will not be able to make it on Wednesday. Should be back a week from today, though. Everything goes according to plans. if anybody has any questions about anything, don't hold back. I mean, I'm taking questions. So, I mean, the only thing we're really waiting on is a trade setup on soybeans. It's unusual that we're 9 minutes into the session and no trade. There really was a trade here, except one would need to maybe adjust the entry just a little bit beyond the 50 moving average because it got filtered out. That's a squeeze filter where the 50 moving average is above the 200 and it's moving down towards the 200. You have the long trade inside of that zone there. The squeeze is the space between the two EMAs as the 50 is pushing down. We want to see that entry on the other side of the 50, and then it avoids that filter. And sometimes filters prevent winning trades. The idea of a filter is it prevents more losing trades. So there's certainly the ability to make a 2-tick adjustment to get around the 50. You could do that. It's just not something that we kind of, I mean, that's more of a discretionary decision. You could work it into your trade planning and decide if that's something you want to do. You can test it out all you want. But just staying with the dots on the chart, it's a filtered out trade, unfortunately, because it got through the first two nice sized targets there. So there's the first trade right there, 1664.5, and the stop is at 1660 3/4. Targeting 1666 3/4, 68 1/4, and 69.5. It did just trigger in. Johnny's saying counterpunch, HT chop. I see 2 EMA lines. No, they're not EMA lines. And green and red dots. Please explain the theory of HT chop, especially what's going on in the market when dots appear. Yeah, so first of all, you're going to find everything you wanted to know about the HT chop indicator on the Counterpunch Express 2 or the Counterpunch Trader member sites, because that's where, that's what these indicators, that's what this indicator is part of. Counterpunch Trader, Counterpunch Express 2. It does 2 important things for us mostly. Well, 3 as it relates to Counterpunch Trader, but the trend part, or it's called high trend chop indicator. The reason why it's called the high trend, you have to first understand the 3 types of trends: long term, mid-term, and short term. Okay, so a short-term trend could go up and down and be part of one longer-term trend or one medium-term trend, etc. The short-term trends are faster. All right, so once you understand that aspect, now you got to realize that there's trends that happen on different time frames all simultaneously. So this is a 5-tick momentum bar. The high trend part of this indicator is trying to tell you what's happening on a fast trend, but on a chart 5 times higher or slower. So in this case, you take 5 ticks, multiply it by 5, and you come up with a 25-tick chart, right? A 25-tick momentum bar, a range bar chart. And this is going to give you what's happening on the fast trend on the slower chart, approximately 5 times slower. All right, so if it was a 5-minute chart, it would be the fast trend on a 25-minute chart. If it was a daily chart, it would be the fast trend on a weekly chart, right? Because there's 5 days in a week, more or less, not counting Sunday. Depends on where you are in the world, but it's 5 days regardless. All right, so anyway, the point of this, as far as Counterpunch Trader, is we need some sort of confirmation, some sort of confirming piece of information for all three of the Counterpunch setups. Now, the green trade is an easy one. It doesn't use this indicator at all, because the green trade, let's look at this one, for example, only cares about its exhaustion level to the one prior. It's comparing where it's situated to the one prior. And if it's equal to or lower for a short trade, that's all the confirmation it needs to give you the green trade as far as the pattern goes. Obviously, you need more. You need the bar closing down below the signal line and the breakout to get to the entry. And there's other things, but it doesn't use the high trend indicator. And the purple one also operates in a similar way, in that the exhaustion dots, like on the long trade, has to be lower than one prior but higher than two prior. So it's situated kind of in the middle. All right, but the white trade is the last set of dots. How do we know that it's time for a counterpunch? How do we know that the market is so tired that it's now going to go in the other direction? You've heard the phrase catching a falling knife, right? The whole idea of counterpunch is a big move in the opposite direction. That's where we use the high trend indicator. The high trend indicator is the piece of information that we need to help confirm that setup, or this long setup, for example. Of course, it helps to look at a chart that's during a time you want to be trading it. So clearly it doesn't work very well during this period of time when you really don't want to be in soybeans. But the idea, just so I could explain it, is that when the fast cyan line crosses over and closes above the yellow cyan line, that helps corroborate the counterpunch trade, the white trade. Because you can't really use the exhaustion dots in relationship to the ones prior as confirmation. It doesn't work. That's where that catching the fallen knife concept comes into play. So we're using the high trend, that the trend turning, the fast trend turning on a slower chart is part of the confirmation of the white trade. And instead of having to take our eye off and look at another chart where then we still have to figure out if the trend is indeed turning and all that, we use this indicator for that purpose. Okay, that's the reason for it. And there's other rules. I mean, in order for there to be a long trade, the histogram has to be in the red or have been in the red. I mean, sometimes it's just like right on the zero line, and it might have just ticked down to the red. And now it just moved up to the blue, and that's still good for the setup. There's certain, the way the code's written, I'm not going to get into all that. But anyway, for practical purposes, it needs to have been in the red, be in the red for the counterpunch. Like if it happens in the blue, sometimes you'll see, like right here in the red, for example, it comes up and then turns down again. This might have been a white trade. It ends up being a purple, but pretend it could have been a white trade, but it actually can't be, because the histogram would have had to gone up into the blue, and it didn't. So there's certain rules and criteria. I don't want to confuse you all and just try to teach you the counterpunch trader in a fast explanation, but that's what the high trend means in this indicator. Now, the other part of it, the high trend chop, right, where you get the dots along the zero line, that is where that corresponds with the chop filter inside of the counterpunch trader. And you might be thinking, well, gee, how come it's in the chop zone here and you still get a trade setup? And the reason why is because the chop filter does not filter out all trades. It only filters out some trades, and it relates to where the trade is to the 50 moving average. So if you're above the 50 moving average and you have a short trade, the setup is above, the entry is above, and you're in the chop zone, it won't let you take it. It'll filter it out. But it will let you take it if you're below the 50 and you have a short. So it's the opposite is true with long trades. If you're below the 50 moving average and you have a long setup where the entry is below the 50 moving average, it'll filter that out if you're in the chop zone. But it lets you take it if you have a long trade above the 50. Because when you're in the chop zone, you could get some great trades, especially when it breaks out, right? So it could situate you in front of some really good moves. So we don't want to be just filtering out all trades. We're just filtering out the trades with the lower chances of success. Now, what is a chop filter? What qualifies a chop zone? The chop filter is a visual representation of a thing that occurs called the Bollinger Band squeeze. And it's not the same squeeze that we talk about when the 50 is pushing down on the 200 moving average and the space is squeezing. No, the Bollinger Band squeeze is when the Bollinger Band squeezes inside the Keltner channel, all default settings. It represents a period of time where pressure is building, low range, compressed price, chop, also known as chop. And when it breaks out, it can break out strong, although sometimes you get a fake breakout and then the big move in the opposite direction type of thing, which you hear me talk about a lot in here. And the chop filter helps mitigate that. So the green dot is when the Bollinger Band is right on the Keltner. So you're entering into the squeeze or out of the squeeze, and the red dots are when the Bollinger Band is actually in the Keltner channel. And where you really see this making a big difference is when you have long periods of chop zone, multiple bars. Something small and short like this isn't that significant. 4 bars only. Really 2 that you're in the actual chop. But when you see like multiple bars, that's a dead market. I mean, it's a market building pressure at least. Anyway, soybeans, if you got long here, would have stopped out and then you'd be short hitting target 2. Targets 1 and 2. And a really nice 2 trade sequence. So losing 15 ticks, that's 4.25 points. But then target 1, 14 ticks, target 2, 22 ticks. So, and this, I don't know if anyone grabbed that, but for me, when I see it just barely tick in and come down, that usually happens too fast. And then when I put my order in, I'm always going 1 tick above because it already hit the entry and got rejected. So now I always ask for an extra tick of confirmation. I already hit the entry, so let's push that entry up 1/4. So that's a technique I do all the time. So probably a trade where the losing trade should have been avoided. The other thing is if you're using the hybrid mode idea, you don't take a stop and reverse. If the line is blue, you're not going to go short, even though this doesn't qualify as a stop and reverse. So in this case, it wouldn't qualify because it stops out first. And then the next trade happens after. But if the entry was above that stop, you'd have to wait for the line to turn red. And then you get short. And of course, it would have stopped out anyway. I'm just using this as an example to explain that's another way to use counterpunch. Hybrid mode, you use the trend mode indicator to prevent some stop and reversals. All right, so I know you didn't ask me that, but since it just happened, I figured I'd point that out. Counterpunch has a lot of cool things about it, how you can use the strategy. Another thing to consider is when you're in the chop zone, And depending on how many dots you see and how long that chop zone's going, in other words, the Bollinger Band squeeze is occurring. Another thing that you'll notice if you were to jump over to Spotlight, for example, is that you could be in a sub-zero situation. So when the volatility is down and it's compressed and the pressure's building, quite often, if you were to look at Spotlight, the trend strength indicator would have gotten below minus 20, and then sub-zero gives you a way to get in front of those moves also. Bit different than counterpunch, but it's interesting how you'll see some correlation between the chop zone and sub-zero. Not all the time, of course, but often, depending how long the chop zone is in effect. So it's kind of interesting. Anyway, Johnny, hope that answers your question. You can get more details on it inside the member site for Counterpunch, either one, Counterpunch Express or Counterpunch Trader. So all in all, a very successful session on the charts we typically follow in here. If you have any other questions, let me know. Again, I see several people joining us, so welcome, welcome. If you have any questions, don't ever hold back. That's why I'm here. I'm really here to answer your questions and teach you what I can about all the strategies that I've put out over the years and that we, I still offer, that you may be a member of or thinking of becoming a member of. And do me a favor and hit the like button and make sure you subscribe. Hit the bell. Now I'm sounding like a YouTuber. Never thought I would, but that's the way it goes. For soybeans, how many trades do you normally take? Usually it's one and done. So, I mean, the plan is to get a target one winner, literally, and be positive. So I guess it depends on how many positions you're trading. I mean, I wouldn't do more. These two trades is enough. Usually it's one and done, like I said, like most of the time. Not all the time, but a majority of the time, I would say it hits its target on the first trade in a matter of minutes. It's kind of unusual that it would be the last trade plan still going, almost 26 minutes in. So hey, John, do you think would you be able to do that? That's probably the one I screwed up. I accidentally started the stream and didn't change the stream key, and it was set for my last Wednesday session. I just totally miffed on that, and I'm like, oops. I quickly ended it. Let me know if that's something you can do. All right, great. Thank you. All right, I'm getting ready to put on my proud dad, go to daughter's graduation hat on now. So unless there's any more questions or anything else you need my help with, I'll give you another minute or so to think about it. But if not, I will be bidding you all a good day. Thank you, PD Legend. Appreciate it. Yeah, once in a lifetime thing. Thank you, Steve. She did a pretty cool video for me, by the way. Maybe some of you saw it. She wanted to show how easy it was to use FX Synergy. So on this channel here, you'll find a video that she did a few years ago now. Can't believe it. Time flies. Time flies like an arrow. Fruit flies like a banana. And with that, I'll leave you guys. Have a great day. See you next time. Hey, congratulations to you, John, by the way. Just saw your comment there. That's awesome. Congratulations to your niece. That's a big deal. Bye, everyone.